And we're live. So welcome to our March 3rd episode of our weekly Crypto Bootcamp Hangout. Today we've got Julian, who's holding it down in Miami despite the fact that he's got a cold, and Siv's on board with us from St. Pete, so representing local. And who knows, some other folks may show up along the way. It tends to be variable like that. We were just talking about mistakes that we have made while trading, which can happen fairly often when, especially when it's a new interface and, you're moving quickly, you're trying to take advantage of some good opportunity, and then you fuck it up and you buy instead of sell, or sell instead of buy, or back, your sell all the way out to your bank account. So now you're 5 days out before you can get your money back into the exchange.
Yep.
Are you trading on Binance, Siv?
Nah, I just got kind of set up my account on Coinbase, but then I used like GDAT.
Yeah,
it's a little bit better, but I haven't gone to different exchanges or anything. Like, I have it set up, but I haven't got to a point to use like Bitcoin to exchange it for like Ripple or anything like that.
So are you only in like Bitcoin and Ethereum right now? Like,
yeah, I'm only on Bitcoin and Bitcoin Cash. I like Bitcoin Cash just because I don't know. It just seems like a name that will stick, and it seems like it's new, so I think it's still got room to make a run. But I could be wrong. I don't know. I mean, some people right. I just don't know.
Yeah, Julian, thoughts on Bitcoin Cash?
Oh yeah, do you want to hear that? I mean, it's not new. It's it's a fork, and so like Litecoin is also a fork of the original Bitcoin blockchain, and they're both kind of like taking the Bitcoin blockchain and then saying, what if it was a little faster? What if we tweak this or that? Except the guy behind Bitcoin Cash is like completely unlikable and such an internet rage troll that, like, even if there was something kind of sensible about the way he decided to fork, I just can't like him, and therefore I can't like the product that he espouses. Right. The best thing about it was I got free money, which was sweet. Like the cash fork, I was like, hey, free money, But as a result, it's because I can't like him, and I don't really see Bitcoin Cash as really much better than Litecoin in terms of being a fork of the Bitcoin blockchain. I think they're both arguably about equally better in terms of technology, like things like the transaction speed, and I mean, my brain is a little clogged right now, but basically, like, the things that you would measure forks against each other by, I don't know that Bitcoin Cash is any better than Litecoin, but he did keep the Bitcoin name. And it's funny, you mentioned the name. You said you think it's got a good name, and that hurt a little bit because a lot of the people from the original Bitcoin thing were kind of like, why do you get to keep the name? Make up a new name. Like, you can have the fork already, but call it, whatever, Bcash is what we all keep saying, like, that he should do. And he hates that and just rages out. So, is it better? I'll say this about Bitcoin Cash. And maybe I'm wrong for it because I still think it's got plenty of room for growth, but it's the only thing in my portfolio that I quickly trade out when I want to jump on a new alt.
Right.
And I'm like, let me cut out some of my cash because it was free. So I'm not spending actual money. I'm spending free gains every time I spend my Bitcoin Cash. So it's easy for me to let go of.
Right.
If I paid for it, I might feel a little different about the whole thing.
I definitely don't like that guy personally. Hasn't really influenced much of my opinion on Bitcoin Cash. I think the biggest thing is I wasn't specifically holding any Bitcoin when the fork occurred, so I didn't get any free Bitcoin Cash. So I'm probably a little bit butthurt about that. When Bitcoin hit 16 and change, even before it peaked out at 19, to me, that was just like a good sign from the universe that it was time to take gains and diversify that out across other platforms, And so that was when I really first made my move into Binance and started spreading out among a bunch of different alt currencies, So I'm kind of sad about that. I'm kind of sad about this other one, this last one that I didn't get an airdrop on because I had the tokens in an exchange versus having them in a private wallet, so I wasn't holding the key to it at the time. So I think Binance actually gets my free tokens because I had them in the exchange.
Oh, that sucks. Wow, I'm hearing my voice back really loud. But I heard that dropped out to like very low value very quickly, the last fork.
Oh, I don't know.
Like I haven't checked. I didn't go for it.
They had posted on the group a couple days back or whatever. Here was how to get your tokens from the fork, and you have to have your private key. And it was like, man.
Yeah, I'm still keeping my Bitcoin on like a wallet, man. I don't like keeping my Bitcoin on exchanges. I mean, I was still there. I barely evaded the Mt. Gox hack. Like I had my Bitcoin in Mt. Gox a week before the hack. So ever since then, I don't like keeping my Bitcoin on exchanges.
Yeah.
You know? And that scores me those airdrops and those forks because since I don't want to be on an exchange, I always have it somewhere where I control my private key. And so even by accident, I can like be lazy and be like, oh, I'll get around to sweeping the wallet and getting my free fork or whatever. Like,
I think one of the things that makes it complicated right now with me having such a wide spread of alt currencies is, you know, there isn't a simple universal wallet that I can store everything in. You know what I mean?
For sure. I'm waiting for the same thing, dude. All my alts are sitting on Binance.
Exactly.
And a couple on Bittrex, but not my Bitcoin. My Bitcoin is on a cold wallet. You know? Because whatever, that's all I've got. That's the only original cred I've got in this game. Everything else, I'm just like everyone else. I'm like, yeah, I got excited, spent my gains at the end of last year on a bunch of alts. I hope it works out, you know, like, yeah.
You know, for me, it's I never had, you know, a significant number of holdings. I was not part of the early Bitcoin holders at all. So, you know, a lot of my friends who are in, they were early Bitcoin holders. You know, so I never had the volume that would make me want to be that way. You know what I mean?
I mean, I don't have the volume, dude, but it grew the little tiny bit that I had. You know, like, I don't know. I love being mysterious because it sounds so big, but let's just be real here. I bought 2 Bitcoin, 2 in 2012. So
nice.
That was a really nice chunk of gains from my $200 spent or whatever. It turned into like $40,000. But it's not like I was holding hundreds of Bitcoin or something like that turned into millions, you know?
Right.
And I'll never forget, you know, you want to talk about mistakes? Like he was, I had no idea that it was going to do what it did last year. So I cashed out one of those coins at $3,000.
Yeah, that's what I'm saying. Like, how do you hold it? It's harder to hold it and just, you know.
I held both for 5 years, but then when it like more than doubled, and I was like, whoa, it's double its all-time high from 5 years ago. We're already at 3,000. I felt very confident that that was a good time to pull gains, having no idea what the end of 2017 was going to look like. And I'll never forgive myself for that, man. So my one little stupid Bitcoin that is still left is sitting on a fucking, you know, on a cold storage now. Like, no, you will not spend me. You know, live and learn. But the cred that I like about that you have, Chris, is not, it's not some kind of original Bitcoin holder cred, because we're all learning about there wasn't a market 10 years ago. It's that you actually code like blockchain related products and that you understand it on that level. That's what keeps me coming back to the boot camp and to conversations with you, because most of the guys that were in the game early were tech guys. They were not excited about day trading. You know, nobody was talking about day trading in 2012, 2013. We were talking about disrupting finance and central banking, but we were really hardcore on the tech. And it was the tech that we were like, we could completely shift this. So I've just come to really trust the guys that get the tech, because that's critical. Like,
I mean, we spend a lot of time more than anything else, I think, in crypto economics, right? Because we have to consider that on all the products that we're building. Like, what's the numbers that work? What's, you know, how many tokens should be drafted as part of this project? What does that mean for users and how they're interacting? What does that mean for incentives, you know? What does that mean for the founders? And how much are they allowed to keep, you know, with the hopes that it's going to gain in value if they plan on trading these tokens, you know? So I think we spend a lot more time in the microeconomics of crypto than a lot of other people do, since we have to. Fundamentally, the decisions that we make about the economics of a new token is going to affect its usage long term, you know?
I agree, but then, you know, there's so much nuance there that I've wanted to pick your brain about. And I don't know if this is like too non-day trading, like, you know, and like our buddy Siv here is going to be like with his eyes rolling back in his head, like, what the hell are these guys talking about? But I had this specific question that's been haunting me, and that maybe on the subject of crypto economics, you could speak to, right? So here's what's nagging me. Venezuela, right? They've got the Petro Coin that the government just came out with.
I heard about that.
You heard about that, right? And I really hate the Venezuelan government. I think they're not good guys, you know?
Yeah.
So I'm not excited about this coin, nor am I ever going to buy any. But they make a claim, which is what my question comes from, because I'm going to put another claim next to it and then the lack of other claims. They're like, oh, our cryptocurrency is backed by oil and all these lovely things. They have this long list of real assets that their crypto's backed by. And I'm like, okay, I get it. And then Tether, of much, you know, debate over the solvency of, you know, a very specific word of crypto economics of Tether, they make this claim that their cryptocurrency is backed by, $1 for every Tether somewhere in a bank account. Right? And it's because they make this claim that questions of solvency arrive. But nobody's challenging the solvency of Bitcoin. Bitcoin doesn't make a claim that it's backed by anything. Neither does IOTA. Neither do how many of these. So why isn't it possible to make, say, a Tether that makes no claim to being backed by anything, but is still functions as a stable coin? You know what I'm saying? That it's locked to a certain value as a trading tool. It's just not backed by American dollars in a bank account.
I mean,
you get me?
Yeah.
Like, why is that kind of claim even necessary or valid or useful?
Well, I mean, I think it's pretty clear why it's useful, because when you're looking at currency itself, you know, there's a big difference between fiat currency versus a currency that's tied to something else with an established value, you know. American US dollars were first backed by gold and then by silver, right? And so that
hasn't been true. I'm sorry, I don't mean to interrupt. That hasn't been true since Nixon. We came off the gold standard, you know, back then. And then what is it backed by now? The good reputation of the United States or something.
Yeah, backed by the GDP, essentially.
But which is, I don't know that. I don't see that as a concrete value. You know, call me crazy.
The biggest thing that I think, you know, when it comes to transactional crypto tokens, I think the only way that they stay transactional and that they stay stable is if they're not on the exchanges. Because if they're on the exchanges and they're being traded, you can have volatility introduced by people who are buying or selling in volume. You know what I mean? The only way that you can keep a transaction or something like that perfectly stable as far as its core value is to not allow it be used for a trading token and only be used for a transactional token. Short of that, everything else just strikes me as marketing, you know? Ooh, Tether's backed by $1 or Bitcoin's backed by oil. It just sounds like marketing, because nobody really in the exchanges is ever paying attention to the underlying shit behind the coins. You know what I mean? Day traders don't give a fuck about that. The only thing they're doing is watching the market move.
Yeah.
You know? Some of us small cap traders who aren't really day traders, we jump in and, you know, we're like, hey, I believe in this project, so I'm going to buy a bunch. Hey, it just increased in value, I'm going to sell some, you know? So that the actual mindset behind it is totally different. And because of that, you know, it's, to me, I think a lot of this stuff where they're saying this coin's backed by this or this coin's backed by that, they're making marketing claims that are designed to help spur buying. They want people to be confident in this token enough to turn USD into it, so that they'll actually purchase the tokens. But if those tokens end up on an exchange, it doesn't fucking matter that oil's behind it or whatever else. It only matters what someone's willing to buy, to pay for it, and what someone's willing to sell it for, you know?
Well, can you think of any coins then that aren't on an exchange that fit that, you know, like that paradigm? Is there one even out there that fits what you're talking about, that isn't on exchanges but is in circulation?
I mean, I think the closest that we've seen to that is the Ripple derivative networks, where transactions are being done, but not in core Ripple.
Huh.
You know, nobody's going to be doing their banking transactions in Ripple from country to country if the USD value of Ripple is going to vary in the middle of that transaction and potentially cause them loss on the backside. You know what I mean?
Right.
It's got to be a stable, predictable value. There cannot be that high volatility for them to be able to use it as a transactional token. So it's only those transactional tokens that are really following that model of not being swayed by the market forces and just holding a fixed value over a certain course of time.
But there's, I mean, this is some high level math, maybe out of my personal league. Okay, but here's one for you, right? I you know, going back to Bitcoin Cash, I had a day when I finally freed up some Bitcoin Cash from some wallet I had swept it up into, and was so excited. I don't know what it was. I jumped on BNB. I decided I was going to buy some BNB, and I saw BNB like rocketing, which is an exchange token. It's literally Binance's in-house token. And I was so stupid. I bought like 60 BNB, like way more than you would ever want. But I bought them at almost 20 bucks. And it hasn't gone back up to almost 20 bucks. I bought BNB at an all-time high. You want to talk about trader mistakes? You know what I'm saying? Like, what was I thinking? I bought an exchange token at all-time high, and it's been sitting down around 10. Like, it came back up to 18, and I'm like, I can't trade those back out until I get up back by 20 so that at least I get my original value of Bitcoin Cash back out. You know, and I should have not even half of that, not even 30 of those should I have bought. Anyway, not that BNB is not good. Sorry, what? Was
that for the discount, like when you do the exchange?
Yes. I was like, dude, I'm doing all my trading on Binance. I might as well just go hard on BNB. But I also mentally, I saw it as kind of playing the role as a stable coin, because they were talking about how they burn a certain amount at different intervals in order to keep the levels and the market, like how much is in circulation, down. And that's how they're controlling the price, is they'll burn amounts, you know, and they'll take them out of circulation, and that'll drop the volume down. This is where I say it's a level of math that's beyond me right now. Like, I get the concept, but I don't really, if you ask me to do that, I'd be like, I don't know how to.
Who can?
Yeah, I don't know how to do that. But here's my point.
This guy.
You know, like, I don't get how there's no controlled environment coin like that. It's like what BNB is, where they're burning some to keep it at a certain level. It doesn't have a claim to be backed by American dollars, where which is another exchange coin. I mean, if you think about it, it was Bitfinex that originally created Tether, right? After they had their big hack and they created all their apology coins, right? And then that paid everyone back for what they were hacked in their apology coin. And they were like, this is brilliant. We should make another coin, and created Tether. You know, like, it's eventually going to dawn on someone, maybe an exchange, maybe not, that they don't have to be backed by US dollars to create a controlled environment coin that functions as a trading tool. And that in order to keep it at a certain value, you burn an amount. It just automatically burns. Whatever it is, however that works mathematically, so that the level comes back, no matter what the trading volume is, comes back to where BNB is always 10 bucks, or you know what I'm saying, or whatever it is, which is, I think, what they're kind of doing with BNB right now.
I mean, I
trying to burn it to keep it around 10.
I mean, we see that token burns are certainly part of some strategy. I mean, Tron's gotten hammered and it's been sitting in the basement, but we know that there's a token burn that's going off before the end of Q1. So, you know, like, that's going to be a time when we're instantly going to see some value recovery as the total supply diminishes, right? So, I mean, that is one way to do it. But another way, I think, really is to just have, you know, if you're going to have tokens out there, you know, that are going to be transactional tokens, I don't think that you can let them be. I don't think you can let them be in exchanges and be traded and still be able to use them as a transactional token. You know what I mean?
I get what you're saying. You're saying because of the volatility, because of all the buying and selling, it'll be too hard to ever even algorithmically keep it at some kind of a level lock, the way Tether kind of does.
Right. And the real world implication of that is, if I have $1 million USD and I put it into Ripple so that I can get $1 million USD on the backside when I pull it out in another country, right? And the value of Ripple drops by 8% in the time it takes for that transaction to complete. I just lost 8% of my $1 million. that's not a transactional token. And that's why I understand why so many people are disappointed that the big transactions that are happening with the Ripple technology are happening without the exchange token, but it couldn't possibly work any other way. You know what I mean?
Right. Yeah, so it's almost like the exchange token in the case of Ripple. You're just buying almost like stock. You're buying in on the company, the good reputation of the company behind Ripple, but that for their actual central bank network, it's got to be offline and off the exchanges.
And the only way that they win is to have, that system we talked about last week where, that they do the Binance method where you're using BNB to pay for your transaction fees because you get a discount on it. Maybe these guys, when they're moving $1 million in their XRP2, whatever their derivative token is, right? They get a discount by using XRP to pay their transaction fees. So it helps drive growth of that token. Like that kind of a model will work. But anything else, I don't see it happening.
Huh. It's odd. I mean, I have to admit, I'm still trying to absorb this stuff. And like my dad was in finance and my uncle. So a lot of these like high level finance concepts are somewhat familiar to me, but I don't really get it. Like I remember after the Bitcoin Cash fork, there were a couple of guys that were talking about forks as an inflationary force or as a deflationary force. And I was like, what does that even mean? Like a fork as a deflationary force, like where it's driving the volume up of the original currency, or that's, how many forks have happened off the Bitcoin blockchain, and have they had a net deflationary effect? Have they been driving the value up by forking off, or that kind of dynamics? I don't get the math well enough to really speak conclusively to it, but my brain is revolving around it because I feel like there's a way to do that better than anybody's done that yet, even in all these exchanges. And we've got thousands of cryptos now, and so many of them don't even have a value proposition other than, oh, we're the new money. Like they're not, you know what I'm saying? They're not even like claiming to be a server, bandwidth utility exchange thing, or have some secondary utility other than being money. So you would think they would have figured that out.
I think there's a secondary factor to how it can be. Well, not necessarily a deflationary method, but a distraction, so you just get handed a bunch of these Bitcash, right? And what do you do as soon as you get this Bitcash? Well, you start paying attention to it. And when you're paying attention to it, potentially you are paying less attention to Bitcoin. You know what I mean? Like now you're thinking, well, maybe I should put some dollars into Bitcash. Like it is diluting the total focus on Bitcoin, which is, when Nico was on here, Nico's always sharing out that article from the Satoshi Institute back in 2013, when they were like, fuck any altcoin at all is bullshit. It should only be Bitcoin forever. You know what I mean? I think that it's because, they had a good understanding of that. And they were trying to like fucking sweep the tide back. Good luck. But, the fact is, every time you introduce a new token, you are diluting the amount of transactions that may be happening within the core token,
I mean, somewhat, and I get the distractionary quality of it. I'm just talking about the free money aspect of a fork, where anybody who's already holding Bitcoin at the time of a Bitcoin fork gets free money. So if I have $100 worth of Bitcoin, and then I get free equivalent amount of Bitcoin Cash, whatever that, is, I've now gotten that in free money. So my net worth has grown. And that could be construed as a deflationary thing, or that my money is now worth more. It's an artificial, growth in the value of the money that I'm holding, or I'm rewarded for holding it. These aspects are really interesting, like airdrops. There are a lot of really interesting things like that you don't see in traditional finance that exist really as a strong part of the culture in crypto.
Right.
And that I don't feel like people have played off of properly. Like there's a convergence point between some of this stuff that isn't being explored that well yet, like the way exchange tokens will burn to maintain levels, and the way Tether will do whatever the hell they do to maintain their level, and the way forks will create value out of nothing, and airdrops. There's still new ways of creating value there that are not fully explored, and that I'm still trying to get my head around.
Yeah, I mean, it's it's funny you just mentioned like money for nothing. At the end of the day, the only
buying
it's only proof of work tokens that aren't money for nothing. You know what I mean? If you look at all of the other tokens that are out there, every time I spin up a new ERC20 contract on the Ethereum blockchain, free money, right? You know, assuming somebody will pay something for the token I just created. But, you know, it's now I've got 10 million of these tokens. You know, if someone will buy them, that's free money. So, you know, again, when I said earlier that some of those things sound a lot like marketing, a lot of this stuff, a lot of these perceived values are just marketing, you know, until we actually get through, I would say, the end of 2019, until we get to the point where we see a bunch of DApps in production, we see people using blockchain applications all the time. The technology's been proven out. It's common. Until then, all of this is speculation. So the vast majority of what you're seeing out there right now is purely marketing driven. And, you know, if it's good marketing, it gives a promise that people buy into. And so they're willing to trade USD for that. And if it doesn't, then, you know, the coin goes nowhere.
I mean, I'm with you. I just think there's some levels, there's some things that may not even make it to 2020.
Like, what if a lot won't?
That's what
I tell people all the time, this is 1997, right? In 1997 to 2000, there were hundreds and hundreds of highly valued internet startups. By 2002, 90% of them were dead. I very much expect the crypto market to go through that same transition.
Mm-hmm.
So, where's my Verge at? I can tell you.
I'm just wondering, like, will there be exchanges?
498 sats. It's not pretty.
Didn't Goldman back Circle for to bought the an exchange?
Yeah, Poloniex.
Yeah. So
that's you know, that's something, because we're in the regulatory era right now. Yep. And, you know, not only is this when institutional capital comes in, but it's also when the laws get written that will kill half of what's out there. So because already things that were legal just last year are no longer legal. And so business models that seemed like they made sense last year probably don't make that much sense anymore, but they're still out there.
How much did you make on the XRB ripoff?
What?
Rayblocks.
I didn't touch Rayblocks, man. Didn't touch it.
I did. I threw $100 in there. You know what I got back? About 20.
Shit.
You know what that dude did in the exchange? Completely blocked everyone from being able to make withdrawals from the exchange, and then fucked the token. You know,
how do you even do something like that?
As much as we all hate this regulatory shit, until it's in place, shit like that keeps happening.
Well, the reason I find it interesting, the whole like Goldman Sachs backed Circle buying Poloniex, is that we're starting to finally get some clarity on classification of different tokens, where you've got security coins and you've got utility coins and you've got, you know, like these are this and that's that. And we don't really have exchanges kind of separating those out. And we're going to start to see that. I don't know if the exchanges will really lead with that, but Poloniex might. I don't know, but we need someone that's like kind of as an intermediary there to start grouping things in different ways, you know, just for clarity's sake, because otherwise people are trading entirely just on market cap and like trade volume. And that's great, you know, whatever, the candlestick charts, you can like wave your hands over your crystal ball all day, but, and maybe you'll make money that way. But I think for the long view stuff, you know, which is the only place I really invest, if you want, or speculate, it's really hard without having a sense who's operating in what space. And it's the read the white papers thing and try and really understand what the hell these guys claim they're doing, you know?
Because here's the deal. I mean, at the end of the day, right, you're going to have some up and down value as people speculate. You're going to have some up and down value as the whales come in. You're going to have some up and down value as pump and dumps happen, right? But the vast majority of these coins, if they never bring their white paper product to market, that token's never going to be worth more than 500 sats over the long run, you know? So it's all about whether that team actually has the chops to deliver the product that they're promising.
how do we even know, like, if they've even launched? That's one of the things that's frustrating. Like, I wish there was, like, you know, in the crypto compare or whatever, coin market cap, I wish there was a way to just, like, kind of eliminate out, like, everybody that hasn't launched, or everybody that just says they're the new money but has no other product that is in any way associated with their new money.
There's like, what, 1,500 coins on Ethereum right now, and the vast majority of them have not. In fact, I can't think of any off the top of my head that have their final mainnet product running yet. Most of these companies came up in 2017 with a 2-year roadmap for development, which means, like I said earlier, it's going to be the end of 2019 before we see how well all this shakes out.
Yep.
Right now, it's just all fucking speculation. You know, I'm still holding strong for Tron. Why? Because they're ahead of schedule on development. They're at their mainnet conversion is coming, like they said, 3 months ahead of schedule. We've got the token burn structured in. They've got the solid management stuff. Its partnerships look great. They have got like 12 major partnerships now. You know, so I'm seeing a company that's moving forward on their goals. Now, does their trading look like that right now? Fuck no. Everybody played with that coin a bit. It went up, it went down. You know, now it's in the cellar again. It's still above where I originally bought at because I got in at like 297, you know, but it's sitting at like, what, 450 right now or 412, somewhere around there, you know. I would expect we're not going to see significant growth on that for at least another month. And by then, everyone who was holding Tron previously, what did they do? Sold at a loss. Oh, fuck, got to get out of it. Got to get out of it. Got to get out of it, you know.
Man, Tron, is that 0.049 cents?
I mean, like, it's 412 sats. I don't really think of them in comparison to USD mostly. I trade pairs to BTC.
Yeah, I'm still trying to get my head around that, man. I can't help it. I still automatically reference USD for every single purchase or trade.
To start with, I mean, I was there at the beginning as well. Brian Cribbs and a couple other folks are the ones that smacked me around on it. They're like, listen, the goal of trading altcoins, day trading altcoins, is simply to catch the volatility to increase your total holding in Bitcoin. That's it. You know, or in Ethereum, or in Litecoin, whatever it is that you're trying to pair trade with, you know? Right. So when I'm doing all of my shit, I say, you know, okay, so right now Tron is at 437, right? I bought in initially, that's 437 sats, or 0.00000436 Bitcoin, right? So I first bought in at 297 sats, right? And it's still doubled up from where I first got in at. But I picked up a lot more around like 6 and 7 after selling off my stack at 1551. You know what I mean? I'd gone 5x on my initial investment. So all that I got back into BTC because I'm trading to BTC, right? So that increases my total holdings in BTC, and that allows me to buy more of them. So even though I spent more relative for what I paid for those tokens initially, I'm still holding significantly more than where I started. Like I started off with like 500 and I've got like 5,000 now. You know what I mean? So it's those kinds of things. And as long as you're staying on that trek to increase your holding in your target token, that's the only thing that really matters. The USD value is going to go up and down. When you want to pull your Bitcoin out into cash, that's when you care about whether the USD is up or down. But mostly I'm just trying to increase the amount of Bitcoin I'm holding.
Every single trader I respect said exactly that to me. And it's definitely stuck as a concept, but I still haven't applied it to trading, mostly because I'm not trading. I swing trade at the most. I didn't make a single trade in the entire month of February.
Yep,
just because of how depressing January was. I was like, I'm just going to hold until the numbers look better. And I'll get back around to this. And especially because I trapped one amount that I was willing to cash in, my free Bitcoin cash, in BNB. And I was like, well, now I got to wait until BNB comes back up to 20 so I can cash that out. Stupid shit like that. And it's like live and learn. But
I bought 5 BNB when Brian told me to for the purpose of trading on Binance, right? And then I ended up selling like 3.5 of them when it hit $20 because I was like, well, fuck it, you know, because my actual transaction fees are super small. I had done like 100 trades and I'd only gone through like a BNB and a half, you know what I mean? So I still had like a significant amount of BNB left. And I just wanted to bring BTC to grab stuff while it was cheap in the beginning of January. So I sold off a few BNB like at their all-time high and started grabbing some other alts, you know?
Yeah. I'm just whatever, you know, I'm just learning, dude. I never claimed I was some kind of great day trader here.
What's your thoughts on Ripple? For going back to Ripple for like marketing, I think that thing's gonna rip. I don't know. I just have a feeling for some odd reason. I know you guys probably don't like it, but I mean, I think
I do like it. I do like it. I will go on saying that. We've talked about this before. A lot of people don't like Ripple. Julian especially doesn't like Ripple because of the fact that it's an SEC-friendly regulatory coin, right? And because the systems that they're building using the Ripple technology are primarily aimed at servicing banks and institutional money, you know? Mm-hmm. And so for somebody who's super into the decentralization aspect of cryptocurrency, that's the opposite direction, right? That is the super government-friendly, regulator-friendly token. I think those coins are critically necessary to the crypto market space because they legitimize cryptocurrency to big business. And I want
them in the game. I want them in the game for sure.
Yeah.
And the technology behind Ripple, they are using it right now. Institutional organizations are using the Ripple platform. They're just not using the Ripple token. That's the only disconnect. What Ripple's doing is they're setting up off main chain networks that are standalone. So instead of you just participating in the same open network or open source network that everybody else is, right? Ripple goes in and they go, okay, you are Goldman Sachs, for instance, right? We're going to set up a Goldman Sachs fork of the Ripple platform that's just for Goldman Sachs. And then Goldman Sachs can allow their partners to build nodes on that platform. And that allows for direct transfer of large amounts of USD from Goldman Sachs partner in US to Goldman Sachs partner in Indonesia, right? And it happens faster than it happens through wire transfer or any of the other means of money movement, you know? Somebody said a while back that the fastest way to move large amounts of cash from one country to another was pack it in a suitcase and fly it there, you know, because there's still so many like regulatory barriers in moving money from country to country that the systems are just slow. So, you know, Ripple's solving that problem for big money institutions. That's good for all of us because that means that the technology itself isn't going to be blocked. When we talk about, you know, when people talk about the decentralized aspect and anonymity and cryptocurrency and all the rest of that, I always laugh and bring up the fact that we're owned at the ISP level, right? Because any ISP can do some deep packet sniffing and be like, oh, that's crypto traffic. Nope, fried, you know. But if crypto has mainstream applications that are being used by mainstream businesses, then ISPs can't just go in and block crypto traffic because it might be legitimate crypto traffic.
I mean, I will always be supportive of central banking coming in. I'm trying to be diplomatic here. Central banking coming into this game that was not their game and that was literally a game designed to unseat them.
Yep.
So I'm always going to be open to and diplomatic about that. However, if at the end of the regulatory era, which is currently looking like we're going to get to the other side of this little regulatory area by let's say 2020-ish, we should be on the other side. Some solid laws that will last will be in place. Categories will be in place. If we get there and all that's left standing is Ripple and like Fed coin, the Federal Reserve's coin, and like everybody else got sunk under and blocked by ISPs or whatever, that would not be a win. And I think it's important to understand what constitutes a win as we iterate out a technology, like understanding what value we propose to bring to a system with this technology. And one of the core values that decentralized currency brings is the idea that central banks cannot and do not control value for all human beings, like that entire systems and networks of systems are built on that are actually predatory to human beings, that they will literally crush nations, those systems. And that we have to give people the power to counterbalance that. I mean, if you step away from the whole war against central banking, which again has things that legitimate problems that it solves in legitimate ways, regardless of the dangers of centralization. What about the unbanked? What about the 8 million people or more in Southeast Asia or in Central America and South America that there are literally no bank branches or ATMs anywhere near them, but they still have day-to-day money transferring needs? Giving money transferring options to the unbanked out in remote villages and towns is a value proposition of decentralized currency systems, that we don't need the central banks to offer that. We already showed that we didn't need them. We are 10 years deep into showing that we don't need them for that. And it's so well proven now that they're like, oh, well, we want in on that game, and I'm okay with them coming in as long as they don't take it over. That's my standing on Ripple. They can't get in on the game and then say, okay, well, now none of you guys play anymore because we're the only ones legitimately allowed to play. That, to me, is an illegitimate entry into crypto. And I expect central banking to make moves like that. And some people are going to have to stand up against it when those moves start getting passed into law. I mean, look at our president, man. He's just going to sign off on that and be like, yeah, that sounds great. We'll just have the Fed coin, and all you other cryptos can go do your, B tokens on the internet or whatever. I don't know. You know what I'm saying?
First of all, I think there's two flaws to this line of thinking. The first flaw is that in the belief in a utopian society wherein a disruptive system displaces established systems, right? What we find typically with disruptive systems of any sort is that they grow best when they're driven by the open marketplace, and that they still don't actually disrupt to the level you think they will. They just become another viable option. And I'll use Amazon, for instance, as a good example of this, right? Amazon started off as online bookseller, right? And they were growing. They had a solid business model. Jeff Bezos is a smart guy. He kept pumping all the money back into Amazon to grow it. And now Walmart, who was the undeniable behemoth of retail sales in the US, is kind of on the ropes a little bit. They're having to make defensive plays against Amazon, this company that's only been around for 10 years or so, actually a little bit longer than that, mind you, but their growth trajectory seems like overnight, all things considered, when you have a 20 or 30-year view of the space, But they haven't actually closed any Walmart stores, and they certainly haven't replaced the concept of department stores, right? They just become a new viable option that you can do your shopping online and have millions of products to choose from, and it's convenient and all the rest of that. So Bitcoin was never going to replace banks. That's where the utopian thinking comes in. It was just never going to happen. Banks are an established thing around the world that everyone knows how to use, that has a significant amount of infrastructure, that people are raised up believing in, right? And even if Bitcoin was wildly, supremely successful, the only thing that it would do to the banking industry is force them to accept it.
I mean,
they would just roll it in as another currency.
I hope you don't think that I'm somehow thinking that cryptocurrency is going to end banks.
Oh no, of course not. Of course not.
Or central banking. That's not. I mean, even if that was the one good thing that Ron Paul ever said he would do is end the Fed, which is a private corporation, by the way. It's not a government institution. Sure. I don't think cryptocurrency is meant to do that. I see these things as being parts of an ecosystem. It's only because central banking has become so overly, the word is monopoly the right word, or overly dominant? I mean, centralized, overly centralized,
It's an infrastructure system that works. You know what I mean?
Works for who? How often? Works for who? How often? There were a lot of crimes committed during the 2008 financial crisis in the derivatives market, for which no one went to jail and for which the masses paid the bills. So that, who did it work for exactly when that happened? Because that's the sort of thing that happens when you have a overly centralized system that shouldn't be possible. And that creating a more diverse ecosystem, which is the utopia I'm after, not like an ecosystem free of central banks, it should prevent, because it gives people other options where they're like, we don't like the way you guys do business. I don't like that you just robbed everybody and then, crashed the markets with derivatives and then took the taxpayers' money to pay it. I don't like that. I think maybe I don't need to do business with you guys. And you have an actual other option. You know, that's the main thing.
That's the question, works for who? And the answer is it works for every single person who gets direct deposit twice a month and has debit cards and auto bill pay. That's the meat of it, right? The only reason that they are able to do the financial things that they do is because 98% of their users do nothing more than use them as a financial transaction system. And they have a significant and well-developed and globally accepted financial transaction system that works.
Right.
And so as long as people are putting money through that system, they've got money to play those big money games up there in Wall Street and using the derivatives and all the rest of that. But that doesn't even the fact that those things are even intrinsically connected doesn't even cross most people's minds. Nobody's closing their Bank of America account. You know what I mean? Like there were some token close your Bank of America account movement.
I was one of those guys.
But you were like the 1% of the 1% of people who gave a shit enough to do that.
Yeah, we were standing out on the street, Occupy style, with signs of graphs and charts. We were like, fractional reserve lending, and let me explain this to you.
I mean, I went out to those protests and I took a lot of photos and shit. It was cool. It was a good time. You know, we all spoke out, power to the people. But the reality of it, Bank of America was never financially impacted by any of those protests. It was too small. Most people are just going to do what they always do. Direct deposit twice a month, debit card for me, debit card for the wife, auto bill pay. And that's what I'm saying. These systems are like concrete. They don't move. They're not affected, you know? How many millions an executive's bonus is might be slightly affected by these things, but the system as a whole isn't, you know?
Well, but I do think the system as a whole can be affected by cryptocurrency as a culture and technology, and we can broaden the ecosystem of options available so that in moments like that, when central banking doesn't behave as it should, there are other avenues that are able to provide you things like debit cards and direct deposit and whatever. Like, I really like my BitPay card, you know, and I don't know. We may reach a point very soon where atomic swaps make exchanges irrelevant, and exchanges are one of the main things that are through creating so much volatility, as you said yourself, in these currencies. Mm-hmm. So if atomic swaps make exchanges no longer a thing, which maybe they will, maybe they won't, you know, I don't know. It's theoretical.
I think a lot of people will still try to trade or still want to trade. You know, I mean, but I do think that when it comes to actual movement of currency, especially when it comes to transactional movement, like buying stuff, you know, that's where atomic swaps really get their power from. I think exchanges are going to stick around because traders like to trade, and traders trade on exchanges, you know?
Yeah, you're right. Yeah, people really like that. There was definitely a lot of adoption built entirely on people's excitement about just getting in there and trading this stuff.
Brian Cribbs has been working on his bots for months now. He made 24% in the last 3 days of automated trading. That's not going to go away, you know?
I know. No, the bot trading thing is going to continue to be a thing. I'd love to talk to him more about it. I mean, I know he was using, what was it, Hasbot?
Hasbot, yeah.
But no other versions. Like, that's one of those kind of code your own. Like, it's not a plug and play off the shelf thing.
No, I mean, it's, you know, all of us are developers. He's a financial guy developer. So he's been working on his own things. I very much, I mean, tag him in group and ask him questions about it. He'll wax eloquent about it for hours. You know, we have Facebook chat about it all the time. He's just showing me the gains that he just set up on his most recent test bot. And that's all he's doing is like, it's rapid small cap trading hundreds and hundreds of times a day. And he's eking anywhere from 15 to 25% in margins a day.
Nice.
Yeah, I'm a fan. I mean, honestly, as a dude who has confessed to some of my biggest trading mistakes today, I still advocate that really only bots should be day trading, man. They're the only ones fast enough. The rest of us, we can.
How it works on Wall Street, right? It's HFTs or nothing. If you try to day trade against an HFT, you're going to lose every time.
Yeah.
They see it faster. They act faster. It's all in milliseconds, you know?
Yeah. And I mean, as a coder, has somebody actually like developed machine learning algorithms on this stuff? There have to be like learning bots that know TA. There's like a TA lib library out there, you know, Talib or whatever?
The only thing that when it comes to converting human knowledge to bots, it's just about writing everything down into code, right? All the things that you know as a human, you have to write that into code. So it's just a matter of time. Even if it's not there yet, it's going to get there very quickly.
So here's the thing about bots. You know, a lot of people think that, you know, that the retail investor doesn't have a chance against bots, and that's mostly true if there isn't any volatility. But as a day trader, as a successful day trader for many years myself, I do have to say that the craft is much, much more difficult to actually master now when you're competing with these algorithmic trading machines. It is possible to beat the bots, but you have to make sure a certain criteria is there. You have to make sure volume is there. You have to make sure a certain trading range is there, that it moves between a certain price. That way, you know, if there's enough volatility, you can profit. If there's enough players in the game, the bots aren't going to be able to do anything to you. Now, one of the things that's been talked about very often is, as far as the stock market goes, is that there isn't any room for day traders anymore. And I actually agree with that. If you were trading back in 2009 or back in the year 2000, it was a perfect scenario for the newbie investor to get in with 5 grand, 10 grand and start making money. And now if you want to trade stocks, even if you have $100,000, you're not going to be competitive enough because you're competing against machines. And these machines are programmed to take every cent out of you. And they keep getting programmed to get better and better, and they adapt to your behavior. Now, when it comes to crypto, the volatility is there for you to make massive profits. Yes, there are bots. Of course there are bots. And yes, you know, Bitcoin is manipulated because you have a very small percentage of the Bitcoin wallets holding over 40% of the Bitcoin inventory in total. So, but with that said, think about this. You have Coinbase, for example, and you have Gemini, and you have all these other exchanges, and they all have buying limits. Coinbase, for example, has a buying limit of 100,000 US dollars. And that goes for Gemini as well. So for somebody to actively manipulate the market, they would have to have an account at every major exchange and max out their trading capabilities, which I'm sure happens. I'm sure. But as far as crypto goes, the volatility is certainly there for you to make massive profits. But here's what I'm observing. I have friends who have been trying to day trade, and I told them when Bitcoin hit, you know, around the 7 or 8K range, I said, hey, go long on Bitcoin and don't trade it. And so I have some friends that are like, oh, I can only afford 1/3 of a Bitcoin or half a Bitcoin. I got to trade it. And I'm like, that's the wrong way to go about it, because you're already trying to catch up. When you're trying to catch up and you get emotional about it, you're going to lose your ass off. I mean, it's very simple. You have this mentality where if you have to catch up, you're already emotional from the get-go. But you actually can make a lot of profit. But from what I see most people do is that they do not. Because when it comes to crypto, I don't know if you guys are familiar with, but when you trade the stock market, they have the PDT rule, the pattern day trader rule, which means you have to have a minimum of $25,000 to make 3 consecutive day trades within a 5-day period. Crypto does not abide by those rules, which is awesome.
Yep.
That means somebody with $300 can get up at any time of the day, 24/7, and place trade after trade after trade, no problem. Now, that PDT rule was designed to protect investors. When it comes to crypto, you can give into your greed, you can give into your fear, and you can either make a lot of money really fast or you can lose it. And so what I'm starting to see is that the guys who are doing very well, I'm not trying to sound biased, but this is just what I'm seeing lately, is that the guys who are doing well are the guys who are coming from Wall Street, who already know how the markets are manipulated, the fact that there are market makers, the fact that there's like fake outs, right, where they go stop loss hunting. We know all these tricks. I've been day trading stocks since 2008, and I'm aware of all these tricks. And I have friends that just got into the game like 2 months ago, and they think they can go day trading. And I warn them, please don't do that. And guess what? Today I talked to a friend of mine who started with, a good sized Bitcoin. Now has a third less because he tried day trading. Even though I warned him not to, I told him day trading is a learned craft. Can you beat the machines? Can you beat the bots? Absolutely. I do it every day. I do it 3 or 4 times a week, and that's all I need to make a living. And it's a very, very difficult craft. It's not to be taken lightly. And if you have the mentality that you're trying to get rich quick, that you're having to, if you want to get a shortcut, if you feel like you need to catch up, fear of missing out, fear of leaving money on the table, then you shouldn't day trade, because day traders like us will eat you alive. I guarantee it. I guarantee it. And also, I do have to say this, as far as algorithmic trading goes, algorithmic trading has to change constantly. You cannot use the same formula over time, over and over and over and over. I don't care how good of a coder you are. You not only have to be a good coder, you have to be a good coder and a good day trader, and you have to constantly revamp your strategies. And when you do, then you can successfully make a bot. But if you have a bot that's taking profits right now, and you don't change it up, you will not be profiting 3-6 months down the line. That's something you have to stay on top of. And I am definitely willing to stand by that. I don't know. I of all the people I know who have these programs and these bots, nobody has this holy grail that is I got this program, I put in this strategy and it works forever. Whoever tells you that is lying. And yes, you can beat them, but you have to know what you're up against. And you can't do it every day. Sometimes, how many of you guys have seen where Bitcoin is trading in really, really low volume and it's having these erratic swings? That's when you have to stay out of the market, because it's strictly dominated by machines at that point. And you have to be disciplined enough to say, okay, I'm only going to take the trades that are worth it for me, that meet my criteria. But anyway, those are just my 2 cents. As a day trader, as a successful day trader myself, and a profitable one, it's possible. But honestly, I see less and less people every day who have that craft.
Mark, I love it when you tune in, man. Your input is always so valuable. First and foremost, can I just thank you for everything you just said?
No problem, Julian. Thank you.
I completely agree with everything you've said, because it matches up with what a lot of experienced day traders have said to me, which I'm not at all. I'm a guy that got into this because I'm into tech and the ideology or something, but I don't claim to have day trading experience. However, I would like to ask you a pretty specific question. What about arbitrage between exchanges, like the same trading pair, arbitraging where you've got whatever, the price of Bitcoin over here is 10,000 and over here is 10,500, and you're just making a trade to close that spread, to pull that, you know what I'm saying? What is that? Yeah. Is that not a much lower risk area in terms of, it still qualifies as day trading in theory, doesn't it? Or am I technically incorrect?
Well, no, you're totally right. It's a strategy of day trading, but and I looked into that, the whole arbitrage thing, because there's a whole lot of room to make money. And I've seen the difference. I have accounts with several exchanges, and I look at the spread between them. I'll see Coinbase literally $200 higher than what's trading in Bitcoin on Gemini. And I do have an objection to that, because I also trade futures, and there's a spread on there as well. So I keep track of all these things. And what I'm noticing is eventually prices converge. So you will be competing with other people that participate in arbitrage. However, that's not to say you can't make money. I haven't tried it personally, but the only objection that I have is that, let's say you did buy a Bitcoin that's $300 cheaper on Gemini. By the time you sent it to Coinbase, who knows how long it's going to take for you to get it there. And then if you sell it on the market via Coinbase, the prices may have already converged by then. So that's that. You know, I don't know how much room there is for arbitrage, but the other thing is that not only do the prices converge, but you have these trading fees, and you know, it might be 8 hours later by the time your trade goes through. And the other reason, the last and most important reason why I did not try arbitrage, is because exchanges hate it. They do not like it. They can track where your Bitcoin came from and where it goes. So if you're sending Bitcoin back and forth between Gemini and Coinbase, for example, they will know, and at their discretion, they can shut you down. So
sure. And I was thinking about that, actually. I'm pretty interested in arbitrage just because it's such a low risk space, you know, and it's a lot less speculation than other trading strategies, in the sense that you're not trying to guess where the price is going to go in the future. You're just trying to take advantage of the spread before the spread closes, right? But what I was thinking about in terms of strategy, I don't know, have you used, do you know Coinigy or Coinigy or whatever, how I assume it's called, Coinigy? Are you familiar with that one?
No, I'm not familiar with that one.
Well, they have an ARB matrix. It's basically a web-based thing where you can connect to multiple different exchanges and your accounts on multiple exchanges through the API and make trades through multiple exchanges on one master central piece of software. And they have tools on there for arbitrage. They specifically have what's called an ARB matrix, which allows you to see the spread between prices on different exchanges. And I haven't been using it. I've just been thinking about, you know, I've been thinking about whether that's probably the only day trading strategy that I would explore, because even if exchanges don't in theory like it, I think it actually, I don't think it's evil or bad or in some way fundamentally wrong.
No, I don't think so either.
You know, if anything, I see it as adding value to the system, where you're seeing like you know, supply and demand imbalance, and you're bringing balance by saying, hey, we've got these over here. You know, I've got them cheap over here. I can fill that ask, and it's anyway.
I completely agree with that.
I've been looking into ways of doing it even better than Coinigy does it, and I was thinking, like, it's one thing, you know, the transfer speed, the idea of buying it on one exchange and then transferring it, and we all know how slow Bitcoin is to transfer in order to sell it, that would never work. Whereas if you actually held, you know, if you held funds on every exchange and you were just managing a portfolio where you did the buy on one side and the sell on another out of different wallets, but not necessarily transferring the coin, your portfolio would still, I don't know, I don't think I've got it figured out yet, but I feel like there's a way to do it without fully transferring the coin, just buying on one side and selling on the other. Does that make no sense? Am I missing something obvious?
No, like I've thought about it too. The thing is, let's say so these exchanges, based on the behavior that I've seen with them, is that they tend to be, they tend to have certain patterns. So for example, I go back to Gemini and Coinbase a lot because I have accounts at both and I watch them a lot. And what I notice a lot is that Coinbase usually has a lower price. So if you were to buy at a lower price in Coinbase, really the only thing that you could do at that point is like try to short sell on Coinbase, but it's really tricky to do that. So if you try to buy in Gemini and try to sell on Coinbase, it's not going to be the same, because there's like this gap that's perpetually there, and you never know when it converges, and it's really tricky. I think when it comes to, until they fix the whole Lightning Network thing where Bitcoin just, you know, gets transferred instantaneously, then it will be like an arbitrager's dream come true. Oh my God, it's going to be a field day with all these exchanges.
Yeah,
but
I'm trying to get
until
ahead of
then-
that because that's like Q2 of this year that they're talking about
Absolutely.
launching. So that's not far.
I mean, yeah, I mean, it keeps changing the date, but yeah, I mean, it's going to be really critical. Everyone's waiting for that. But the thing with the arbitrage thing is I have not been able to pinpoint something steady, and it always changes. I have my own day trading strategies, and I can say, oh, okay, if this, then that, and I can try to feel out the market, look at the market cap, look at, you know, consumer sentiment, whatever helps me make my decision. But when it comes to arbitrage, if there's a $60 or $100 spread one way or the other, I have no idea why that happened. I honestly have no idea. But that's just me. I have heard of arbitrageurs making a lot of money there. But
I feel like what I love about it is that it doesn't matter why, and that there's no speculation about the future. You're not guessing which way it's going to go. You're literally just seeing a spread and trading in the spread that's right in front of you. There's no guessing. There's no wondering why. You just trade the spread. And I really like that about it. It's the only concrete trading strategy of all of them to me. The rest of them are so steeped in speculation and technical analysis where you're looking at candlestick patterns, but it's all just educated guessing to me. And even though I know that there are ways to do it predictably, I still can't get past the fact that I'm guessing the whole time. Like I'm guessing with math, but I'm guessing.
Well, when it comes to trading, you're totally right. Yeah, you're making your best guess when you're doing a trade, and the point of this is to have an edge. Is like you've seen the market so many times for so many years that you're practicing your edge. You're putting emotion out of it, and that's what's going to make you successful 3 out of 5 times, and that's all you need to be a profitable day trader. Be profitable 3 out of 5 times and you're good. But going back to arbitrage, I just thought of this right now because I was trading Litecoin a couple weeks ago. I think Litecoin might be a better candidate for arbitrage because it's a lot quicker and cheaper. It's super fast. Yeah, so that might be something to look into. It doesn't just have to be Bitcoin. But, personally, I'm pretty heavy on Bitcoin. I have a lot of friends that are going into Neo, going to Litecoin. I love Neo, by the way. But the thing is, because Bitcoin is still recovering towards its all-time high, and I'm pretty sure we all know that at some point Bitcoin's going to reach 30K. Bitcoin is the leader right now. So when Bitcoin has these 5 and 6 and 7 and 10% gains, all the other altcoins are going to struggle to keep up because when it's kind of like the US dollar, right? When during the global financial crisis, what happened when everyone's currency was in doubt? Everyone flocked to the US dollar because that's the leader. So what's happening with Bitcoin is it's getting bigger and better gains than every other coin. I don't know if you guys have been paying attention to the market, but it is because Bitcoin is the leader. Bitcoin is what's considered, it's the gold. It's the, it's the top coin. It has the first mover advantage. It has all that. So Bitcoin is getting those higher gains. That's something to note also because I've withdrawn money from altcoins and get into Bitcoin just because of those gains. Now, if you paid attention to Neo, which I strongly I really like Neo. It was heading towards 200, and that was when Bitcoin was at its all-time high. It was having very, very steep gains. I mean, these were awesome. When Bitcoin's doing really well near all-time highs, the altcoins are going to have even bigger gains. But if Bitcoin is recovering and it's rallying, then I don't agree. But I'm pretty sure this is highly debatable. A lot of people they think opposite, but this is just what I'm observing. For me, I know when to switch from altcoin to Bitcoin. But anyway, I've gotten off topic. But yeah, if you want to arbitrage, there's plenty of opportunity. I just haven't figured it out how. So if anyone figures that out, please share.
I'm still working on it, and it's one of the only things I think a bot is an appropriate strategy for, because you got to be quick, you know?
Yeah.
And I feel like you could actually automate something like that, which is way less speculative than other trading strategies, in a way that was effective. I don't know, but I'm not a programmer. I know a lot of programmers. I'm not a day trader, so I'm guessing at it, but it just seems like it's right in front of us. There are opportunities there every day. And I'll keep you guys posted. I'm going to keep looking into it as if I develop anything that is actually useful.
And we need to get Brian Cribbs in here on one of these, since he's doing so much work right now with bots for trading and doing really well at it.
Yeah.
If I can get him to sit down on one of these sessions and talk about his use of bots for trading, that'd probably be very, I think, enlightening for a lot of the folks here.
Yeah, I'd love to hear it.
Well, we've been on for about an hour 15 now, so it's probably time to wrap up our live broadcast. So I'm going to call that the end of our official bootcamp hangout for this week. And thanks for tuning in for everybody who's watching.
All right.